Hey everyone, welcome back to Corporate Decoder, the place where we unravel the mysteries behind big business, making them simple for you. Get ready because today we're diving into Semler Scientific's latest report, and let's just say there are some significant shifts happening that might surprise you. Before we dive in, if you love getting clear, concise insights from these complex corporate filings, make sure you are subscribed. We've also got a fantastic Discord community linked in the description below, where we break down these kinds of reports even further, so join us there. Alright, let's get straight into what Semler Scientific Incorporated has just told us. This is a Form 8K filing, a report that companies use to announce major events that shareholders should know about. Think of it as the Wall Street equivalent of breaking news. The company Semler Scientific Incorporated is making some big operational changes. They've approved a plan to basically streamline their operations to make things more efficient and improve how much money they make compared to their costs. What does this streamlining involve? Well, one of the main things is a significant reduction in their workforce. They are cutting around 37% of their employees. This is a pretty substantial number, and it is happening pretty fast with the goal to finish these changes by the end of this year. So what is the financial impact of these job cuts? Semler Scientific expects to save between $0.7 million and $1.1 million each quarter just from reducing salary costs. This is expected to start kicking in from January next year. That is a decent chunk of change that they hope to put back into the business or improve their bottom line. Now, of course, letting go of 37% of your people isn't free. They anticipate having to pay out around $1.2 million in severance packages. These are one-time payments, and they'll be paid out in December of this year and in January of next year. So while they are cutting costs in the long run, there is an immediate expense to manage. The company is being upfront though, saying that these numbers are based on assumptions, and the actual costs could be different. On top of these big changes, Semler Scientific is also implementing a retention program for the employees who are staying. This is a cash incentive program designed to keep their remaining non-executive staff motivated and focused. This is especially important because they are also in the middle of a proposed merger with another company called Strive Incorporated. This program is expected to cost them about $1.6 million. Speaking of that merger, this has been in the works since September and was recently amended in December. It is an all-stock deal, meaning Semler Scientific shareholders will receive Strive stock in exchange for their Semler Scientific shares. This filing is actually partly to provide more information about Strive to Semler Scientific shareholders as the merger becomes more concrete. Now, here is where things get a bit cautionary. The report includes a section on forward-looking statements. This is standard practice, but it is important to understand. These are statements about what the company expects to happen in the future, things like anticipated savings from the job cuts, the success of the merger, and future financial performance. These statements are based on current expectations and assumptions, but they come with a big disclaimer that actual results could be very different. And what are some of those risks? Well, one of them is the volatility of Bitcoin. Semler Scientific has been involved in acquiring and holding Bitcoin as part of its treasury strategy. Bitcoin's price can swing wildly, and that uncertainty affects the company's financial stability. It is a pretty bold move to tie your company's financial health to something as unpredictable as cryptocurrency. Another major risk involves the merger itself. The report spells out several things that could cause the deal with Strive to fall apart. This could be anything from not meeting certain conditions to unexpected legal issues or a change in circumstances for either company. The uncertainty around a merger is always a big deal for shareholders. The filing is also very clear that the merger might not happen exactly as planned or might not happen at all. This is a crucial point for investors to consider. If this deal doesn't go through, it could significantly impact Semler Scientific's future plans and its stock price. Even if the merger does go through, the report warns that the expected benefits like cost savings or strategic advantages might not materialize or might take longer than anticipated. This is common with large mergers where integration can be tricky and economic conditions can change. Another risk factor mentioned is the potential for changes in the share price of either Strive or Semler Scientific before the merger is finalized. This can create volatility and uncertainty for the deal's final terms. The report also points to where you can find more detailed information about the merger and the companies involved. They've filed a registration statement on Form S-4, which contains an information statement, proxy statement, and prospectus. This document is packed with details for shareholders considering the merger. It also mentions that certain directors and executives of both Strive and Semler Scientific may be considered participants in soliciting shareholder votes for the merger. This is standard disclosure to ensure transparency about who has an interest in the outcome of the deal. And finally, the report clarifies that this communication is not an offer to sell or a solicitation to buy any securities. It is a piece of important information being shared with the public. So what is the big picture here? Semler Scientific is clearly undergoing a significant transformation. They are cutting costs by reducing their workforce and focusing on operational efficiency. This is happening simultaneously as they pursue a major merger with Strive Incorporated. This creates a situation with both potential upsides and considerable risks. The decision to invest in Bitcoin adds another layer of complexity and potential volatility to their business model. While it could offer significant gains, it also exposes them to the unpredictable nature of the cryptocurrency market. Looking at all of this, Semler Scientific appears to be in a period of considerable flux. They are making bold moves to reshape their core business, which presents opportunities for improved profitability and strategic growth through the merger. However, the high percentage of workforce reduction and the inherent risks associated with a merger and Bitcoin investments are undeniable concerns. The key for investors will be to closely monitor the execution of these cost cutting measures the progression of the Strive merger and the performance of their Bitcoin holdings. Success in these areas could lead to a stronger, more profitable company. Failure in any of them could create significant challenges. Alright, that is our breakdown of Semler Scientific's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think the cost cutting and merger plans are smart moves or too risky? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord community linked in the description. Thanks for watching, and we'll see you next time on Corporate Decoder.